The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour, and it is certainly my pleasure to be here. Monday, Wednesday, Friday, 11 o'clock till 12. And, of course, I follow 2 great hours. Steve Rhodes starts off 9 o'clock. Joined with Tom O'Brien, 10 o'clock till 11. Tremendous shows. I'm here at 877-927-6648. Love to take your calls. And after me today will be Kate Stalter, fabulous technician in terms of looking at small cap stocks. Those small cap stocks can certainly give one great profits. So it's worth listening to Kate straight after this. For 3 o'clock till 4, you got Dave White. Of course, you know Dave White because Dave has a great show. Talks about his power vector indicator. And he's our technical guru. And, of course, 4 o'clock till 6, you get wrapped up with the day's action as well as the expectations for the coming day. Tom O'Brien. So let's go to the market. Dow's down 40. Now, this is really interesting. Dow's down 40. Was up a little bit early in the morning. Same thing happened yesterday. Kind of went up, then hung around, tried rally, and then closed at the low of the day, down about 40 points. Today it ran up and started pulling back. Now it's down 40 points at 13,156. The S&P is down 6 at 1406. The comp index is down 9 at 3,111. Gold is down 12 at 1672, and silver's down 37 at 3224. Interesting. A number of subscribers have asked me, why aren't you looking at going long gold? And I have to tell you, I see nothing attractive at this particular point in the gold, in the gold sector as well as the GLD. Yeah, I can see pop-ups and things like that, but it seems to me that the action in gold from the peak F top is telling me that upside is limited, and we are liable to continue to see all the way into next month lower highs and lower lows. Just everything about the chart. Maybe I'll get a chance to look at it in greater detail in a little while. I just wanted to cover that because I've been asked. Now, this to me is quite important. You've got copper down 2 at 105.25. Copper is down 8 at 379. That is a big hit. And I wanted to talk about that in relation to what I'm looking at in the market. I have a couple of ways of anticipating certain moves based on the ChapmanWave. But every once in a while, in fact, I don't ever recall, I say once in a while, but this particular single leg to the upside in the Dow is really, it's something I have to monitor really closely. And here's the reason. Because theoretically there should be higher highs, but there's no way you can have a peak A in the Dow and a potential peak D in the Qs. In the ChapmanWave, the simplest way of looking at it is you go from the lowest, most identifiable low bar, and you, as soon as all the technicals are in place, and that might be technical indicators, that might be that you've passed peak A strongly into leg B, or past peak B strongly into leg C, there should be 4 higher peaks at least, taking you to a peak D. I alphabetically notated them, capital A's on the way up, lowercase on the way down. Well, the IYC, that's the, let me go through these. In fact, if you're looking at Tiger TV, at this particular point, you're actually looking at the chart of Apple. I don't want to get rid of that right now because I'm liable to start talking about the different technical indicators and then forget all about going back to Apple. But Apple is very important. There are other stocks in the NASDAQ. It isn't just Apple. But Apple is a very big weighting. And the weighting, of course, is something that you have to take into account. There's just no way that you can ignore Apple as if to say, oh, this doesn't count. Of course it counts. So The chart that I have right now, I'm going to move over to the down a second, is a chart of Apple having a spectacular move from around about the 400 area, actually lower than that, but the breakout was really 460, going straight up to 600, and today's high is 621.45. A powerful leg D in the monthly chart. Not only that, there was a channel that was broken to the upside, and that's telling us quite decisively that when the correction in Apple comes, Apple should trade down to the 460s to the 440s. That's not the point, because you have to say, how can that happen? It has to happen because you're getting a sell signal from the shorter term. Well, the shorter term would be the weekly. Well, the weekly technicals are spectacular. But the on-balance volume, A, B, C, D, is in leg D, and is saying, be careful. This is the point where you've got to be a little bit more cautious in terms of any new entries into Apple. Now, of course, you keep saying, any new into Apple, you're nuts. Well, you know what? You could have bought Apple any month from way back in 2009, and the pullbacks in the monthly charts have been very minor, and it just kept going on to new highs. So at any point you would have said, are you nuts? Absolutely not. It was a perfect entry point. So right now, I say that it's a little bit more difficult to even think of the upside. Why? Because the way I've got it is there's a gap at, I had it notated, where's it gone? 575.40 in the daily was the gap up on the 14th from the close the day before at 568. So that would be your first level of major support in Apple. But at this particular point, even the daily saying, yeah, the MACD is starting to look a little weaker. I don't say weak, but weaker, because of the fast-moving average, that yellow line. But at the same time, it's walked the 9-period exponential moving average. That's a wonderful technique that I teach when I give my seminars or my Master Trader series, go into great detail, as well as the webinars. And at this particular point, there is one moving average that is slightly above the 9 EMA, and that says we're getting to a point where Apple is close to turning down. Okay, and if there's a doji close today, and Apple closes underneath the low of the day, whatever the low is, at this point it's 616.41, Apple's at 619.20, then you're going to say, okay, be careful. Hey, wait a minute, let's go to the 120-minute chart. Well, the 120-minute chart had a very quick peak A, peak B, peak C, leg D gap this morning. That also says, be a little bit careful here, because the MACD, stochastics at 90%, that's really good. But the MACD has crossed positive, but it's way underneath that big explosive move that went to peak F in the 120-minute chart at 11:30 on the 15th of March, saying we're getting to the point where Apple could be telling us a story. So that tells us that if we go to the Qs, 1, 2, 3, the Qs are in leg D, possibly a peak D if there's no, double check here, if there's no new high bar tomorrow. But the MACD and stochastic are still very, very strong. So there are ways of renotating, but this is, to me, this seems fine. Leg D up in the daily, leg E up in the weekly. It's E/A, but I'm calling it E for now. I like to be a little bit cautious. And then, of course, we've got the monthly, which is stopping right at that up channel that I drew months and months ago. Never expected to get there so quickly. But that says the area around 68 to 69 is where you really have to watch, because that has been the repellent zone. Not the price, but the up channel, that red line to the green line. The red line says once you get into that little area, every other time you've reversed. So I'm watching that closely. So now let's go back, and we're going to look at the Dow. And I've tried every single which way. Now what I did is, for my subscribers, I gave them a very detailed report on another ChapmanWave. Oops, it's not that one. It's this one. Yeah. Nope, it's not that one either. Wait a minute. Where did it go to? I'll find it. It's a daily. All right, I'll find it, because there is a chart that I showed this morning of the of the Dow, and it shows where the resistance is. But let's look at this, what I call the naked chart, which I also showed my subscribers this morning. Very detailed report. I explained that we had made the cup and ladle ChapmanWave cup and ladle pattern, going to a peak A at 13,289 on the 16th. That pattern says when you start to pull back, watch out, because you could make the ladle, and that ladle could test the breakout, the lip 13,055 high of 29th of Feb. And if it goes back into that, you've got to look for other patterns. Well, we got that pattern, and that was, besides the Roman candle that I talked about as being vulnerable, there is also a pattern that I said was a declining wedge formation. It's got to snap out of that and go above the 9 EMA. Gosh, that's exactly what it did on the 26th of March. Then I said, be careful, because if we don't make a new high, the pullback that we're looking at, even though there's now a V-shaped recovery, which says on the 30th of March, another 2 days, 29, 30, yeah, there should be a spike, and that spike should take us to at least the 13,280s. Watch the 9-period moving average of 13,152. What was the low today so far? 13,146. Break underneath that. Take out the low of the candle of the 26th, 13,082. That changes the pattern greatly. And I don't know what to call. I've never seen a peak A minus fail like this in the Dow. Another thing is, well, as we get into other aspects, I will go through it during our session today. But we have a caller online waiting patiently. We've got Mike in Chicago. Hi, Mike. How are you?
Great, Basil. How are you?
Very well, thank you.
I've got Abbott Labs up on a 10-year monthly chart.
Okay. Now,
and
I can't believe that I've lost. I have no idea what's going on with my trade station. I've notated this at least in the last 3 months, maybe 3-4 times, all the way through. Let me just check. A, B, this is leg C in the monthly. Is that what you just said?
Well, I'm starting from April of 2000, or I'm sorry, May of 2009 is my low bar.
That's at 4127, correct. So you get peak A at 4837 in June of 09, peak B in January of 2010, 5679. Then it pulls back. It also has at the next lowest low, which is 4507, an inside. It's what I call a ChapmanWave overlapping wave. So then there's another peak A, peak B. That gives you a powerful leg C, which should go to D. That D should take out 6109, and this month we've taken out 6148. So that's a really powerful pattern. Hey, hold on. I'm going to finish the notation during the break. It won't take me more than a couple of minutes, and we'll be back with Mike looking at Abbott Labs ABT powerful monthly chart.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. And the Dow is down 31, S&P's down 5. And we are on right now with Mike in Chicago. We're looking at Abbott Laboratories, which is at a spectacular move. And I'm just going to show the charts here with the ChapmanWave notation. Now, this is the monthly chart. ABT is the symbol. It's at 61, down 33 cents. Now, this is really important. If you use the ChapmanWave to notate, especially when you're looking at monthly charts, you get a much bigger picture. And the big picture says that it has a certain cyclicality of 1, 2, 3, 4, 5, maybe 6 quarters. So that's 6 halves. So July to so 6 1-year period. So that's 1, 2, 2.5 years of about 2 years of rallying, and it did that from the low of July of 2002 at 27.90. It went to a peak E. I just want to double check. I think that's an F. 49.98, 49.84, 49.50. Oh, round number 50. So that went to a peak F. When you get to do this a lot, you really can appreciate, even in monthly charts like this, a 1 penny difference or a 2 penny difference. So that's a peak F top in July of 2005 at 50 round number, pulls back to 37.50 in November of 05, and then what does it do? It makes another peak D with a big doji. That Y doji says that candle will be tested regardless of whether you go up or down. It's exactly what happens. It pulls back from the high of peak D 61.09 January of 08, pulls back to the 50 area, then it tries to rally, it fails to make a new high, 60.78, and then it pulls back sharply to the low of 41.27, May 2005, and that's where Mike says he's been counting the peaks. Now, let me explain something. Mike, you know about the ChapmanWave overlapping wave, right?
No, that's why I've got, I just continued the count A, B, and then I thought we were in a leg D, but I see you've got it relabeled. So that's where the discrepancy is.
Yeah, it's a little messy right now. I'm just going to clear that up. I misspelled, I missed the P, so it didn't come out as overlapping, came out as overlooping. So this is what's called a ChapmanWave overlapping wave, and it's a very powerful signal. What we've got is that from the low of May of 2009, you get peak A at the 9-period moving average at 48.37 and pulls back June of 09. Then it immediately breaks out and it goes to leg B and then peak B at 56.79, January of 2010. This is fascinating. It pulls back and it goes to a low of 45.26, has a rally, goes to a peak, a little what I call a gray A. In other words, it's a letter underneath a previous major peak that is still in active. Let's call it active. And then what happens is it fails and goes to a lower low, but it doesn't break the low of May of 2009, but instead it goes to a low in January of 2011 of 45.07. Then it has another series of rallies, and it goes to a peak A at 54.24. That's below peak B of 56.79. Then it goes to another peak of 55.61. That's what I call, I'm changing the color right now. So this is a lesson for those of you who are involved in the ChapmanWave, and I know a lot of you are because I get emails all the time. And what we've got now is a peak B that pulls back. The moment that peak B, it's a peak because there was a lower high bar, the next one, breaks 55.61, and goes to 55.62, it activates a gray peak, a gray leg C. The moment it breaks above 56.79, you've got a combined leg. That is, you've got the power of when you're going on a major highway, and you're coming from an access road, you're going onto that highway. You know how you got to sometimes accelerate like crazy because you don't want to get smacked by the cars in the right lane behind you? That's exactly what happens. And what happens is you get a very powerful move. It usually occurs from peak C going to leg D. If it goes from B, it says not only do you get leg C, but you should get a leg D. Looking out, Abbott Labs is very, very positive. I would have said to you that I prefer to see it break and close above 61.09, the high of January of 2008. We've got a couple of days to go. We'll see where it closes. But I wanted to emphasize that because the MACD and stochastic are still rallying. So that's a very big positive in this particular market. We want to see what's left here, what's left standing in the monthly charts that are not in leg D, E, or F. This is one of those. Now, the weekly chart I've got as I don't know how you counted it, but I'm just continuing the wave count, and there as well there was an overlapping wave, but this time it's at peak D, E, and we're in leg F. I can't call it F/B, and I'll talk about that, but most importantly, we need to get to, are you in this at all?
Oh yeah, I've got very long-term holdings in it, so I'm sitting on quite a substantial.
Wonderful, good. That gives me time to go through it. I don't have to say quickly get out or get in. I'll be right back with Mike. We're looking at Abbott Labs.
Hi, folks. Turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Target Technicians out. Dow's down 41. S&P's down 6.53. We're going to have to watch the close today. It's going to be very important. If the Dow really slices underneath that 9-period exponential moving average in the daily chart, in other words, if the Dow closes underneath 13,127, 13,100. A lot of reassessing is going to have to be done here because some of the stocks that are really key to my work are acting very, very well today, and then others that are also very key, like a Caterpillar, and Deere, DuPont. We got to watch those because that's telling us something. So and copper. I mentioned copper before. I'm just going to quickly do the M. Copper's pulling back a little sharper than I would like to see. So we're going to watch this. But we are on right now with Mike from Chicago, and we're looking at ABT, which is Abbott Labs. It's down 39 cents. Now, what I do have here is on a very short-term basis. 61.49 was the high yesterday. 61.48 is the high today. When I get two parallel highs close together, mostly this works in monthly charts, but it also works in the dailies, and I'm at a D or an E or an F, I say, hey, you've got to be careful, and I explain why. The 120-minute came off the 200-period exponential moving average fantastically. Back on the 7th, was that the 7th? Yeah, the 7th of March at 55.91. It had an instant restart for a peak D, went to another peak D, gave a pullback, then another buy mode in the 120-minute chart to the high of 61.49. at 11:30, the 27th, that was yesterday, and now it's pulling back and it's under the 200-period moving average. So on a short-term basis, like a number of stocks that I'm looking at, this is saying, be careful. The MACD is at 96%. I'm sorry, the stochastic's 96%. The MACD is looking very strong, but there is a chance that it could pull back. Whether it pulls back and makes that kind of letter A, that Eiffel Tower pattern, and just goes straight under 60 support is going to be important. I'm suspecting that it's going to make a sideways consolidation with another rally attempt, and that rally attempt, if it can't break, in other words, if it goes to 60.50 or 60, let's say it closes at 59.80, and then it has a rally. If it makes that, the pattern I call the dreaded H, it looks like a lowercase h. So in other words, if it then, by today's Wednesday, by Friday or Monday, it's had a pullback and it's starting to rally. If that rally fails around about 61.10, 61.15, and then arches over, you've got to be careful, because that's saying, timeout's coming. The weekly says, yes, you can expect it at any point, but there is no signal yet to say that it's negative. It's getting close, but it hasn't yet said so. So looking at, I love this chart. What I'm going to say to you is, if you want to take a little money off, kind of reward yourself, this is probably the point to take some money off. But plan that this money is your Abbott Labs money, and you want to put it back. And where would I put it back? If at any time in the next 3 weeks to 4 weeks, it gets close to 58.50 to 57.90, that's where I would put it back. So I hope that helps you.
Great, Basil. I really appreciate it, and I might email you my monthly chart that I notated.
I'd like to check it out. Absolutely.
For some reason, I've got a few different numbers on my chart, but I don't want to take all the time because I'm sure there's other callers. So
yeah,
move on to the next person. I really appreciate it.
You email it to me, Basil Chapman at tfnn.com, and I'd love to get back to you. Good. Let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hey, Basil, how are you doing this morning?
I'm doing well, thank you.
Hey, Basil, I'm going to ask a question, and I'm going to follow you online. I'm trying to get long ATPG close to the 50-day moving average based on the slow stochastic, and because it is a high percentage, it's almost 30% short. They're almost 30% short. What do you think about that? I'm trying to get in on the 50-day.
Wait, when you say the 50-day is, I've got the 50-day, it's under the 50-day. Exponential or simple?
The simple.
Okay, I'm using the exponential. I prefer it. Let me do this. It's now underneath. Okay, and did you say that you're going to listen or you're going to hang up and listen?
I'm going to hang up and listen.
Okay, good. So I'll do it. Thank you for calling. ATP Oil and Gas made a peak D. Folks, I don't know how many times, for those of you in the den, you can see it. For those of you in Tiger TV, during the break, I go through these charts and I do the notation if I haven't done them before. And it's just, to me, I couldn't even tell you. I thought I counted like 500,000 of these that I'd done. But that is ChapmanWave peak A to at least peak D. It's probably more. I mean, I'm doing it for 20 years, every single minute of the day. So, and all of those that I lost, do you remember? I lost a whole bunch of charts that I've had to redo. And when I say a bunch, I'm shocked at how many. They're not lost. They are somewhere on my system. It pulls up something else by mistake. So I'm stuck. So ATPG is at $7.78. It's down 30 cents. Now, there's a high of 950 on the, that was March the 2nd, coming from the low bar. Now, this is very interesting. Let me change this plus sign. Sometimes I start off with a plus sign. Later on, I go back and I change it to an up arrow. There's no crime in this. You just want to be able to get it right. And sometimes it's a little difficult to identify whether it's going to be a buy mode or just a buy signal that might fail. So I start off with a plus sign. And that's the low of the 1st of February. Now, listen to this. It runs up all the way to $9.50 on the 2nd of March, and now it's pulling back. It's pulling back with the look that there's a sort of a failure look. I'm going to show you the T-bonds in a moment, the TLT. You might recognize this. Within this, I love it. In this, just amazing. You know, every time I do it, I am just shocked at the power of this ChapmanWave going to a peak D. Within this, I was about to say to you, if I go to the TLT, The weekly chart that I spoke about for a long time, the weekly chart of the TLT has got, remember that pattern I was talking about? Went to a peak E at 125.03. That's the iShares Lehman 20-year Treasury Bond Fund. Pulled back to 109.82. And I said within that you can get a peak A, peak B, peak C, and even a peak D. Well, we got that in the daily. The weekly only went to a C minus. Then it arched over and it broke and went to 109.69. A lower low, but closed above it. That says it can rally, but the resistance is going to be maximum of 119.14 before it has to do some retesting. Doesn't have to go back to the low since it didn't close below it. Now let's go back to AT. Of course, I have to look up the symbol. PG. And look what's happened. It's done exactly the same thing in the daily. It is about to test the low of $7.70. I'm going to put this with both an arch and the rectangle formation. These are the techniques that I teach in my Master Trader series. There you are. And look at this. You've got your rectangle right here. Right there. So within the rectangle of that flagpole, you get yourself a buy mode that can go towards the top, but it could fail once it makes a peak D, which it did. Underneath, it went to $9.03 on the 16th. That says to me that if ATPG, ATP Oil and Gas, closes underneath $7.70, the next level of support will be between $7.35, it's at $7.78 right now, and $6.96. The MACD, you see how wide the MACD, the red line is the slow-moving average, the yellow line is the fast-moving average. Look how wide that is. It's going to take quite a while for it to turn around and flatten out with the fast-moving average flattening out. Look at the stochastic. Looks like it really wants to go. It's at 22%. Looks like it wants to go to about 18%. So that's number one. I wouldn't touch it before it actually, before I knew whether it was going to close below 770. If it doesn't, it could bounce one more time. The resistance would be around about $8.13 to $8.22. And then it should come back and retest. Now let's see if that's confirmed by the weekly chart. Well, the weekly chart has gone to a peak A and a peak B. And now let's have a look at this expanded. It had made a doji top peak E above the 200-period moving average the week of the 4th of March of 2011. Now it's come all the way down. It started to make only slightly lower lows, but that says you've got to have a major bounce back over at least the previous arch of $11.85, but it couldn't do that. It made a high of $9.50. So I'm saying be careful. This is not something you want to get in too early with, because the stochastic failed to get above 80%, very weak at 67%. I'm going to be saying that I wouldn't touch this just yet. Now let's look at the monthly chart to give us some kind of an idea. The monthly chart is actually improving. It's not great. I'm just saying it's improving. It once made a high of 57.58 back in November of 2007, plummeted down to $2.75, and then it ran up to a peak C minus, then another C minus lower down. So this is a negative chart. Now, what I'm going to say is that that doji candle with a low of 6 and a high of $7.97 of December of 2011, that's the candle that I think it's going to test. And I don't know if it's going to test the bottom of it, but 623 is the low of February of, the low of last month. It's gone to a higher high. So that says to me, I think you are right in looking at it as a potential rally stock, but not yet. So Freeman, what I'm going to say to you is hold off. Let's see what happens. Even if it had to turn around right now, I still see the weight of evidence saying that it has to go lower, and I wouldn't be looking at it as a potential buy until it gets to about $7.40 to $7.10, and that 696 will be the major support. So don't touch it yet. Keep it on your radar. Don't lose it. Don't suddenly forget about it. Keep it every day. Monitor it. Why? Because the weekly chart is saying, I'm desperately trying to rally. I know I haven't got much strength yet, but I'm starting to make slightly higher highs and slightly lower lows. slightly higher lows, and that's very important. So I hope that covers that for you. Now, what I'd also like to do is there are a number of aspects that are very important right now. Key is that VIX index, and I said to subscribers today, we actually went long, the 200% long the Dow, what is it called? The DDM. Never remember. Oh, the iShares. The iShares, only because I thought there was a chance that if we got it on the pullback, which we did at 70.49, for a less than a 0.5% risk, a 50 cent risk, there was a chance that if there was that spark to the upside today, we could be moving higher. But I also said that the VIX index, that volatility index, if it moves above 1620s, either 1620 or 1630, be careful, because that's going to put a lot of downward pressure on the market. Well, look at this. The volatility index has gone above the 1658. Has it gone above? Yeah, the 1658 high of the 22nd. So this is leg C up, which says we should still get to a leg D if this is going to be working in terms of it going to a buy signal, to a buy mode. But it can't really be a buy mode yet, because the stochastic, although it turned positive, is only at 23%, and the MACD has turned up. And this says to me, there's a chance that this is a counter-trend rally in the volatility index, but I cannot get too sanguine about anything right now. Why? Because if we look at the key stocks of the Dow, I don't know if I did this. I think I did during the break. GE is holding very well, but it's at 19.91 on the 9-period exponential moving average. Potential peak F top. I don't know what to call it right now in the weekly. That's what I'm calling it, peak F. That says, hey, you got to be careful. Yeah, but it's been holding so well. IBM. I must mention that we are long a core position of GE. IBM has been holding very well, but this could be a leg E with a leg E at 208.69 with a peak E if it pulls back and doesn't make a new high in the next 2 days, and instead it breaks 205. If IBM breaks 205, then what you've got is you've got leg D in the weekly, and that says, hey, even though the stochastic and MACD are very good there, you got to be a little bit careful. Now here's the other thing. In the Triple M had a nice bounce yesterday and even this morning, but now it's starting to pull back. So that says to me, you've got another one of those peaks in the daily, but here there's the low of, let's see, 84.63 on the 25th of January was not taken out. So this really could be an extension leg E in the daily, and that says fine, okay, now you can pull back. And in the weekly, it is making a peak E. And you remember I spoke about that technique that I use of two slightly lower high bars? You've made a 90 round number. Oh, 90 round number high bar. 90 in Triple M 3 weeks ago. Then you went to 89.90, 10 cents lower. It's almost so subtle that most people wouldn't see that. But that's the kind of thing I look for. Now we're going to watch this closely, because on Friday, if Triple M closes under 87.55, that's going to say, yep, that's a peak E. You got to be careful. Let's go to the final one, UTX, as we go to a break. Basil Chapman, 877-927-6648. And UTX has been the clue that there's a problem here. Make it peak D in the weekly and a peak E in the daily.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. It gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. Of course, Larry's away, so you've got Kate Stalter coming in straight after me. And I will be doing Larry's Commodities Hour. If anyone wants to look at any specific commodities, send me an email at basilchapman@tfnn.com and give me the symbols. And we've got William in Singapore. Hi, William. How are you?
Hi, great. Thanks. I called you 2 days ago, and you asked me to call back and follow up with the case of the Apple. And did you listen to me about those particular the calls that you had? Yes. You asked me if it can go above, and asked me to able to hold back. So that's what I did.
So you've made a lot of money, and are you still holding the calls?
Yes, actually, the other day when I mentioned the call position, I was mentioning about the April position, not much. Yeah, so I'm still holding since I still have some time, and it's in the money. So except that I'm not sure what's the direction of Apple, going forward.
I'm going to make a recommendation. I would get out of your Apple calls right now. You've had It's a fantastic move. I think the upside for Apple now is limited. I had said about 3 weeks ago that I thought that the upside for Apple would be around about 614, maybe a little bit more than that. I see today it hit 621. The Dow is down 110. S&P is down 13. I'm going to say, take your money. You've had a fantastic gain. You'll have a chance to get those calls again, probably. And I would just have patience. Now that you've made some money, get your money off the table. Enjoy it. Relax. There'll be time again to buy the calls. In fact, I'm going to even make another recommendation. Take a little bit of your profit and buy, even if it's just one put, as it is right now. Okay. And that way, any consolidation, you'll be able to enjoy a consolidation, because I see the upside as being very limited. I just got a peak D, probably confirmation in my 120-minute chart, and that says that if Apple was to close under 611 in the next 2 days, then it probably is going to go sideways and test 600, and then maybe even go to the 590s, have a bounce, and then maybe come down again. So I see the upside as very limited until it re-energizes. Right.
So based on the Chapman wave, probably right now is almost at the peak level.
It's in a leg D in the daily. I haven't got the sell signal in the daily because I need to have a lower high than today. Tomorrow, if the high tomorrow is less than 621.45, and especially if it closes or gets close to 615, if it can get close to 611 or 610, then I'm probably getting a very short-term, at least a short-term sell on Apple based on my 120-minute chart, because the 120-minute chart is still acting pretty well. But I need it to go underneath 611 to get a confirmation in that 120-minute chart. Once that happens, then you're looking at, there'll be money managers wanting to buy this again, but I do think that your best opportunity to take profits is right at this particular moment, because the premium is still, even though it's pulling back, I bet the premium is still very high.
Right. So in that case, I'll do a put position at the same time.
Yeah, just one. We'll just keep it very modest, because we don't know for sure. But it seems to me, based on the work I'm looking at, even if it was to pop to 623 or 624, it will come down and do testing of the 610 to 608 level in the next week or two, maybe even less than that. So I think this is a good time to do it.
Sure.
Hope that helps you, William. Congratulations on a fantastic position.
Thank you very much.
Thank you. Folks, I'll be back tomorrow. My service is the opening call, very detailed report every day with all the different positions we have. And go to the front page, check it out. Stay tuned for Kate Stalter, fabulous program coming up on low price stocks, I bet.